Well, hello everyone, and welcome to today's webinar, coverage for the Fast Lane, Term Life Insurance with Accelerated Underwriting. My name is Brandon Johnson. I'll be the host for today's webinar. We've had our term life insurance policy, our new term, out for about 2 months now, and we've had a lot of great positive feedback. We've had a lot of clients and consumers enjoying the convenient process along with affordable price. Since the launch, we've learned a lot about the process, and we continue to improve it as well. So in today's webinar, we're really going to talk about some great sales ideas and processes that are going to help you sell more in 2018. A couple things I did want to point out as far as housekeeping things. If you have questions, you can type it in the question box. Also want to point out, we did recently have approvals in a couple of states with a new product. As far as California and Florida are the two major ones. So if you live in those states, it's going to be approved. It'll be available on February 6th. So just an FYI there. Unfortunately, Seth Groff, he's usually the one that presents some of these, but he is unable to do this because of a health issue. But no worries, he will be back next month. But I do bring about 9 years of experience to the table here, and hopefully I can fill in for Seth on this webinar today. So let's cover what we're going to do today. First, we're going to take a look at the consumer insights. Specifically, we're going to look at phrases that consumers use are typing into Google when they go out and research about term life insurance. Some pretty interesting stuff. Then I'm going to cover some of the highlights on the new term and walk you through the accelerated underwriting process, which is one of the most important parts of the webinar, so you understand that part. I'm also going to give a couple tips for faster issue. And with it being out a couple of months now, we've seen some of the things that cause hiccups for agents. We definitely want to make you aware of those. So if you do run into those, you'll know what to do. And then I'm going to give a couple of case studies and show some new resources that our marketing team put together for you to use this year. So for consumer insights, if you're like me, and I know some people, they pretty much Google everything, and it's no different for consumers when they purchase life insurance. We learned that they're going out and they're researching life insurance before they purchase it. We went out to Google Trends, which is a free service to anyone, and we looked at see what they were searching for. And we're pretty surprised. And when we did find it, we found out that they were looking for not only what certain products were as far as term insurance, they also wanted to learn about what it was and how it would benefit them. So you as an agent, you're going to want to need to know how to answer these questions and address the concerns that the consumer has. You can see they're listed. The first one is, what is term life insurance? For me and you as people that work on this on a daily basis, it seems like a very simple question, but maybe someone that doesn't, like most consumers, they really don't know what term life insurance is. So you want to make it, very easy for them to understand, put it in layman's terms. So for example, term life insurance provides protection for a limited number of years, for up to 10, 15, 20, or 30 years. And it's used to cover temporary needs such as income replacement, pay off mortgage or other debts. So, that definition really helps them understand exactly what that is. The other thing that came up was term life versus whole life. This can kind of be a more in-depth question. The good news is our marketing team actually put a marketing piece together they can use with your clients that helps explain and helps them decide the difference between term life insurance and whole life as well. The next one is, how much term life insurance does your client need? A lot of agents, what they use a needs analysis. And this really helps them determine how much their client is going to need. And really, a lot of times it results in a higher face amount, and it helps the client understand why they purchased the policy. If you don't use one, we got some great news. We actually also have that have you have access to that after the webinar as well. That's something our marketing team put together. Another one is, who needs life insurance? This one is a little more broad. And really the best way to answer this is to give examples of clients that you worked with in the same demographic. So if you're working with someone that maybe recently bought a house, you can give an example of someone you just recently worked with, and that's why they purchased the life insurance, is because they wanted to cover their mortgage if something ever happened to them. And the last couple things you see there, they want term life insurance with no exam, and they also want low costs on that term life insurance policy. So the good news is, with our Assurity term product, you can accomplish that with it. As you can see here are the updated flyers that we created. You will have access to these after the webinar. You can see there the first one is what kind of life insurance is best for me. This really helps them decide on, if it's term insurance or if it's permanent insurance, what's going to be best for them. And the last one is how much term or how much life insurance do I need? This is really a needs analysis. The good part about needs analysis are you learn a lot about the client without feeling too invasive of their personal things, because once they start answering a couple of questions, they kind of open up about their financials, and you can learn more and more about them and give them a better idea of what they need. So like I said, those are available to you, and I'll give you an idea of where to find those after the webinar. So let's recap on why we developed this product. When we first started doing research on it, we found out that individuals, they obviously want life insurance and not have to go jump through a bunch of hoops to get it. They also want it to be affordable, especially with the younger generation. So when we developed it, we wanted to give them the option of getting affordable life insurance at a quicker rate than what we're currently providing. So that's why we developed the accelerated underwriting for this product. We also found out that, consumers, they don't like the idea of paying for insurance that hopefully and probably won't ever use. So we made a big emphasis on including that return of premium rider that's available on our 20 and 30-year term. So those are the two biggest things, and accelerated underwriting is the biggest thing that I want to focus on when we're going to this webinar, so you understand exactly how that works whenever you're filling out the application. So let's look at some of the basics of the policy. Issue ages, 18 to 75. You can purchase 10, 15, 20, or 30-year term. We do still have conversion options, which is big. It seems like less and less companies have those options. We do, we do have it. You can do it all the way up to age 65. If it's on a 10-year term, it's got to be within the last year, before the last year of the 10-year. If it's on 15, 20, or 30-year, it has to be within the 2 years prior to those term dates. We also put emphasis on using an e-application. If you use the e-application, you'll have access to the possibility of getting instant decision underwriting with that. And I'll talk a little bit more about that here in the next few slides. So to continue on this, the basics of the term, one nice thing about it is we do go all the way down to $25,000 in death benefit. It seems like anymore, most companies have a minimum death benefit of $100,000. So that $25,000 is great for those clients that maybe don't want to go up to $100,000 or maybe don't need that much coverage on it as well. The two areas that I'm really going to focus on are death benefits of $500,000 for clients 18 to 50 and $350,000 for clients 51 to 65. For $500,000 for 18 to 50, they can qualify for that instant decision underwriting when going to our e-application. If they're over the age of 50, 51 to 65, they go up to $350,000 and qualify in that instant decision underwriting. One nice thing about that instant decision is there's no, cap as far as the standard rating. We can go all the way up to Preferred Plus, and they're not going to be discounted just because they got that instant decision underwriting. So it's still considered fully underwritten, and they can do it all the way up to that Preferred Plus underwriting. If we do go above these face amounts, just keep in mind that it's going to work like a regular term life insurance policy as far as the underwriting process. An exam would be required on that. So this is just for that instant decision possibility with these face amounts. With this accelerated underwriting, I'm going to dive a little deeper into it now. When we developed it, our goal is to get up to 50% of the applications we receive on e-applications instantly approved. And really, we did that, one, to make it more convenient for the client and for you as an agent, and also increase the overall cycle time of an insurance policy. And it's going to increase the placement as well. Because if you're sitting with your client, you can let them know that they're approved right away. The likelihood of you placing that is very, very good. It also eliminates that NIGO, the not in good order, that we get a lot with those paper applications. If someone sends in applications, it's pretty easy to miss something on the paper application that you have to go back to a client and get. So this helps prevent that on the e-application. So now to get into the e-application process or the accelerated underwriting, like I mentioned, you do have to use our e-application, submit it through our e-application. When you're starting out the application, step one here, we do need to get clients' permission to gather third-party data. So it's a little different than most e-applications. We actually require a HIPAA authorization form to be signed at the beginning of the application. If you're meeting with someone face-to-face, it's pretty simple. They just have to, check mark a couple boxes and they hit confirm, and then that uses a signature. you're doing it over the phone, it is the email wrap signature process like you've used in the past if you've written the e-application. Once you get the HIPAA authorization, you can fill out the other information as far as their address, their beneficiary information, and then you'll get to the underwriting decision or underwriting engine or the health questions of the application. When you get to there, what we're going to do is we're going to pull some public available data, MDR, prescription drug history, MIB. It's going to do that in the background when you're filling out the application. Once you finish that, all the health questions, there will be a button that says get a decision. You can click on that button. It'll say approved as applied for. It'll say refer to underwriting, or it will say rejected. So the good news is if they're approved, you can let them know that great, you're approved as applied for. If they're referred to underwriting, it doesn't mean that they're going to have to do an exam. It means that underwriter is going to take a look at that. Once you finish that, you are not complete with the application. You still need to do the e-signature at the end. So you need to do the e-submit. So you'll need to get the signatures just like you would on a regular application on there and submit it to us. If it is approved, it will actually go directly to our issue team and they'll get it issued as soon as possible, which is usually the next day. So very quick turnaround on that. If it is referred to an underwriter, like I mentioned, there's a possibility we could require an exam, possibly an APS. A lot of times, all that's needed is an underwriter take a look at that, maybe confirm something, and it can get issued. So it doesn't always mean just because it's referred to an underwriter, it's going to require an exam. So keep that in mind. So that's really important stuff to remember whenever you're going through the e-application and that accelerated underwriting. We do have on the right-hand side here, we actually do have this marketing piece that does a really good job. And a lot of times we have questions that come up, how do I know if my client's going to qualify for instant approval? It's always going to be tough as long as they're healthy. In most cases, they're going to. But some of the things that maybe can cause that are, if they're outside the limits of the death benefit, for $500,000 for clients 18 to 50, or above $350,000 for clients 51 to 65. So that can obviously be another reason that it's not going to be instantly approved. Height, weight, something that can knock them out for instant approval. And on this flyer, we also have some things that kind of deep in more detail as far as DUI in the last 2 years, bankruptcy, high-risk hobbies like private aviation or skydiving, taking prescription medication for major health issues as far as cancer, kidney disease, or heart disease and stroke. So things like that. It doesn't mean that we're not going to, they're not going to qualify. It means that we're going to require additional underwriting for that. With it being out 2 months now, we've had a lot of things that we wanted to mention to make it a little easier process, some tips for faster issue. The first one is enter the inaccurate risk class. So if you're with a client and, if you think they're going to be a standard risk class, don't put them at preferred plus. If you put them at preferred plus and they end up getting a standard, that's going to require a delivery requirement because they're going to be approved other than applied for at a lesser risk class. So, if you really think they're going to be a standard, put them in at standard, which it makes a little easier process for you as an agent and your client. The second one, it says, search all that apply boxes. When you're filling out the application, you do have to fill out an occupation for the client, and it does autofill, and you want to make sure you use one of those autofill options. So if someone's an insurance agent, for example, if you type it in, it'll pull up insurance agent. Make sure you click on that and put it in the box, because that will make sure that it'll help it get that instant decision approval. The next two bullets are really talking about the HIPAA authorization form. That form that I said needs to be signed at the beginning. It really has to do with if you're doing it over the phone. If you're doing it over the phone, it does the email wrap signature option, which it emails the client the option to sign it. And it goes through a 5-step process. Once they get through that process, at the end, there's a button that says notify my agent. The client is not required to click on that. You want to remind your client to click on that so it does notify you that you're aware that it has been signed. Another thing with that email wrap signature option on the HIPAA, if you're doing it over the phone, after you send that email to your client, you'll have to exit out of that e-application and wait until you get a notification that it has been signed and then log back in. If you stay on the same screen and wait for it, it actually will not populate that signature until you get back out and get back in after it's been signed. So a couple of things to be aware of, especially if you're doing over the phone with that. The last one is answer all the reflexive questions. This really has to do with the questions that come up during the health part of the application. For example, if your client is taking medication for high blood pressure and they have high blood pressure, it will populate additional questions. You want to make sure you answer those completely. Because if you miss something on there, it's going to be referred to an underwriter. If you answer those just because they take medication for high blood pressure isn't going to kick them out of the instant approval. We just won't know unless you answer those. So be aware of that on the application, especially the health section of the application. At Assurity, with our old products, our non-midterm and our term 350 plus, our living benefits were a big part of those, and they continue to be with our new term product, the term life. The first one is return of premium. I've hit on this quite a bit. Obviously, it's a big thing that clients are looking out for, and it seems like less and less companies are offering this return of premium option as well. So we always like to mention that it is available on both our 20 and 30-year term products, and it's very affordable. I always suggest putting it on a policy just so that they are aware that if they don't use it, they can get all their money back, because they don't have to obviously take that rider if they don't want to, but it's good to show it to them. And the second one is a critical illness benefit rider. This pays a lump sum cash benefit upon first ever diagnosis of a covered critical illness. We do have a list of that's on the illustration if you add it. It works the same way as our standalone critical illness as far as the 3-category approach. You can have $25,000 up to $100,000 in benefit. It can't be any higher than the original face amount, but you can have up to $100,000 with that. It'll pay, heart attack, cancer, stroke. It can pay up to in 3 different categories as well. The third one is monthly disability income rider. And this provides a monthly benefit to the client that never becomes disabled from an injury or a sickness. With that, in its 90-day elimination, up to $3,000 a month benefit for 2 years. One nice thing about our living benefit riders that I always like to mention is that, one, they are additional cost, but if they ever are activated, it's not going to lower that death benefit. And we always think that's really important, because if someone does have a critical illness like a heart attack or cancer, the likelihood of them needing that death benefit that's accelerated, like on other policies, is a lot more likely. And the likelihood of them qualifying for additional life insurance is unlikely until much later in life, where it's a lot more expensive. So we always like to mention that. And then during the case study, I'm going to give you another example of why it's important for you as an agent to be talking about these with your client, not only to protect them, but to help you as well earn more commission. So we're going to get into the sales ideas. The first one here, we're talking about a younger client, Amanda. She's 27, married. She earns $47,000 a year as a college instructor. Her husband, Lucas, he is working part-time, but also attending grad school. They obviously both depend on their income for dual incomes. They recently purchased a home and both have student loans. So the considerations on this, obviously I mentioned they have student loans. That's a big debt that they have to worry about. They don't have much in savings, so if anything happened to one of them, they wouldn't have anything to fall back on. Amanda does have some life insurance, but it's a small group life insurance that's equal to her salary, so only $47,000. So the opportunity here is pretty obvious, and with Amanda, she doesn't want to have to do the long application process, but with her being young and healthy, she's going to qualify for that instant approval through our accelerated underwriting system. With that extra coverage, if anything ever happened to Amanda, Lucas, he could finish his degree and he could pay the living expenses that he has when he's going to school. Amanda, she does want to have the option to get her money back at the end, so we did offer that return of premium option on it. One thing I say I have not mentioned, when you're looking at the product, it's called the endowment benefit rider on the illustration, but it's the same as the return of premium. So when you see that at the bottom there, the endowment benefit rider, it's the return of premium. So the solution here, Amanda, she bought $250,000 of death benefit for 30-year term. She qualified up to Preferred Plus. She did that on the accelerated underwriting, instantly approved up to $250,000 at $16.75. By adding that return of premium rider, it added an additional $4 a month, up to $21.10. So for $250,000, 30-year term is $21.10. Only additional $4 for that return of premium rider. So it's a no-brainer, especially for younger clients. We are very, very competitive in that market. And so I would suggest showing to every client that you present to that return of premium option. Obviously, when you're talking to clients, there's always objectives. With Amanda's, it was we can't afford it right now. The biggest thing to focus on is that you can talk about how a lot of people overestimate the cost of insurance, especially term life insurance. It can be a lot more affordable than you think. In fact, it's going to be a lot less than what you pay for your monthly cell phone. So that's something you can talk about. I mean, you can see that it was $21. Most people's cell phone bills are well over $100 a month nowadays. The second sales idea is for kind of older clients, that are a little more established. Chris, he's 40, Amy, she's 38. They have 2 children. They lived in their house for 10 years. Recently, Amy's dad passed away from a long battle of cancer, so that's fresh in their minds, and they're thinking of what would they do if something happened to them in that situation. So the considerations, Chris and Amy, they both feel very comfortable about where they are financially. The one thing they do want to do is make sure they have something in place for their mortgage, which is $200,000, and their mortgage payments $1,250 a month. So the opportunity here is to offer Chris and Amy $200,000 of affordable term life insurance. They're both healthy, so they received that instant approval with our accelerated underwriting process. And at the agent's suggestion, with that cancer, with Amy's dad just passed away from cancer, he talked about adding that CI rider for $30,000 a month, which would cover a mortgage payment for 2 years. And that's, I always like to talk about this area with the $30,000 because, adding the CI rider is one thing. If you throw, you can pick a number out of the air. If you, use that needs analysis that we have, if you find out what their mortgage is, you take that, add it over a 2-year period, so $1,250 over 2 years is roughly $30,000. You say, hey, if something ever happens to you as far as cancer, heart attack, stroke, a major illness, you have your mortgage payment for 2 years with this $30,000. So it puts that, number in perspective to them. So, rather than just picking a number out of the air for them. So it's a great way to add that CI rider. You can see here, Chris, his premium is $22.14 for a 20-year term for $200,000 at preferred plus non-tobacco. You add that CI rider for $30,000 a month. That's $20.28 for total premium of $43.32 for Chris. And with Amy there, it's $16.53 for $200,000 of 20-year term at preferred plus. Her rider is $16.13. So total premium of $32.66. Add that together, it's $75 a month. Pretty affordable coverage. I talk about that CI rider, how great it is for the clients, but think about you for an agent. If you don't add that CI rider, you just write them the term life insurance for $200,000. That premium is roughly $40 a month. You're going to get paid on $40 a month. Just by you adding the CI rider, giving them that additional protection, you're going from $40 a month commission to $75 a month commission. You're almost doubling your commission just by adding more protection to your client. So that's a great way, one, to earn more commission for you as an agent. You can see just as many people earn twice as much money by adding, some living benefit riders. If you add that DI rider, it's even more commission. So keep that in mind when you're thinking about adding those riders. It's going to protect your client more. It's going to earn you more money. Some of the objectives here, if they're worried about paying the premiums, and it'll make it hard for them to keep up with savings. And a lot of their friends have told them the hassle they went through to get a policy. The good news with our, accelerated underwriting through Assurity, it makes it really a quick, easy process and get that instant approval and at a very affordable cost as well. A couple other areas I do like to mention where we are very competitive. We've seen some good business come in. 40-year-olds, males in their 40s, standard tobacco, 20-year term at $500,000 is $152.25 a month. So very affordable for a large amount of coverage for a tobacco user. Then the 70-year-old male, standard non-tobacco, 10-year at $500,000 is $618.14. We see a lot of those, 70-plus-year-old clients, 65-plus. A lot of them are continuing to work past the age of 65, and they still have debts and mortgages that they need to pay off if anything ever happened to them. So they have those coverages, those needs still for term life insurance. As you can see there, that's a good-sized case of $618.14. So those cases are out there, and we see a lot of them, and we're very competitive in those scenarios. A couple conversation starters to end it here. The first one really is talking about, if someone does have coverage in place, you can really talk about, with recent changes in life insurance products, you may be eligible for greater coverage for less cost. Life insurance is getting cheaper and cheaper, especially term life insurance. If someone has had a policy not very long, a lot of times you can save them money just by giving them a new policy. The second one is you can ask them if their current life insurance policy provides any benefits while they're living. If it doesn't, and maybe they're happy with their life insurance, if not, you can add our life insurance policy with the living benefit riders, or you can just write our standalone living benefits, like our standalone disability or a standalone critical illness. So it's additional sales for you as well. And the third one is, would you like your money back on your life insurance plan if you never use it? It's pretty surprising. I always use the analogy. If someone asked me if I paid a little extra for my car insurance and if I didn't ever use it to get my money back, you're darn right I'd take that deal. So, you can use that analogy when you're talking to your clients. Earlier in the webinar, I mentioned that we did have those new marketing pieces available. You can find them at assuritytermlife.com. You do not need a username or password to get these, so you can go there and get them now. The first one is, term or whole life insurance, what is best for you, great for your client, and then a worksheet or interactive PDF, how much life insurance do I need? That's a great needs analysis tool. So these other ones are also available that you can pull off there as well. That's really all I have for today. If you're not familiar with Assurity, we're a strong rated company, excellent rated through AM Best. I talked about term today. We have great products as far as disability income and participating whole life. I think we got most of the questions answered. If we didn't, we'll be sure to reach out to you and get that answered. We will have a recording of this webinar available, and we'll send it out. I appreciate everyone's time today.